Do you want to learn Elliott Wave Theory? Well, if so, consider joining the Green Star Trading Patreon at Tier 2 or Tier 3. You will unlock this playlist, 14 video part series teaching you Elliott Wave Theory from scratch in a simple and easy to follow manner. You'll also get access to other playlists such as the My Chart series showing you how to set up my chart the same way I do, with the same indicators and tools configured the way I use them. Also, I've now got a second series of this which will cover all of the classical analysis techniques I use. We've started with episode 1, part 1 and part 2, support and resistance, but we'll be covering volume profiling, candlestick patterns, indicators, all sorts of things to come over the following months. I also have my deep dive videos as well, which I'm now currently doing a second part of a new one which will be uploaded to here soon. And yeah, I also have a trading playlist showing you how to use the standard trade setup, the STS, and a little bit on psychology and risk management as well. You can unlock all of these things by becoming a patron today at either Tier 2 or Tier 3. There are some other benefits to joining Tier 3, or you can just support the channel at Tier 1 for a £5 a month. Either way, I'm not going to read it all out to you. Follow the link in the description box below of the video you're watching now. Come over, have a read for yourself, and if you want to sign up, please feel free to do so. I would always recommend signing up at the start of the month so you get a full month's value for your subscription before Patreon charges you again. Alright guys, let's get back to the video. Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, it's time for our weekly look at the stock market using our proxy for the S&P 500 SPY. We're also going to have a quick look at the Nasdaq as well. And then we're going to look at the put-to-call ratio and the VIX. Right then, so unpopular opinion, the market has bottomed. That would be my assessment of sentiment currently, that if you are in that camp, you are probably not being very well received at the moment, as sentiment did get extremely bearish near the recent lows. So I've shifted from a primary and alternate position into a neutral position awaiting confirmation. Now what does that mean? It means that I no longer have a primary or an alternate count. I have a bullish and a bearish count. One of those counts, which was originally the primary, which was the idea for a bearish move lower, is extremely close to being invalidated. Extremely close to being invalidated, and could happen pretty much today if the market continues to push higher. I expressed in the last video on the stock market that I was starting to feel much more comfortable with the idea of a bullish low, and I was starting to lean gradually into the idea that it could be possible. The market is, after all, a discounting mechanism that gets well ahead of the news and the fundamentals. This is just the way it operates. So if this is a technical analysis channel and that's what we're going to focus on, which I claim it to be, then yelling fundamental reasons as to why this can't be true from the rooftops is kind of self-defeating. So leaving those fundamental arguments behind, which I've discussed in previous videos, I explained why I feel the market would go down given a fundamental explanation and why I felt it would go up given a fundamental explanation. If you're not familiar with those views, go back and watch the last stock market video. It was only a week ago. So, putting that to one side, let's just look at the chart for a minute. Okay, so here we are on the SPY on the day time frame. The bearish count is that we had 3 waves into a W, 3 waves into an X, and then we were looking at a much larger ABC structure for the Y. Okay, now if that were to be true, the way I'd interpreted it was that this was the first leg of the 1 into the 2. We're going to go 3, 4 and 5 to get the C of the Y. Well, the wave 2 now has retraced so much that it's starting to get extremely close to invalidating. If we just take a look, we're well beyond 90%. Well beyond probably 95, 96% by this point. So this is now becoming less and less likely. Now that doesn't mean there isn't an alternative count. We will leave here today with an alternate bearish count. We should always have a backup. Okay, but there's no denying the strength off of the lows here. Right. Now we are going to frame that inside of our own narrative. That's what human beings do. So Bears would tell you that, oh, it's a counter trend rally and they tend to be, face rippers and they can be extremely convincing, but really it's just counter trend rally before we roll over, and that's going to be their narrative. And the bulls narrative is going to be, we bottomed, we're off to the moon, new highs by Christmas, if not sooner. So we have to set aside those emotional narratives and just focus on what could happen instead. So that's what we're going to be doing. So knowing that this count is likely to get invalidated, we're going to put this to one side for the moment, our bearish count, for which we will find a replacement, and we're just going to take a look at the chart without a count on before we come and look at the bullish count at the moment. So we've come back into prior resistance, okay, at this prior high here. We're not quite there yet. I don't know why that's been moved, it needs to be adjusted slightly. 417.44. Okay, and we're in this little supply zone currently, okay, where we've seen the market come down, we've seen the market come down to a level here, rebound, find resistance, okay, and then get rejected and move lower. So where we found sellers before, we can find sellers again around prior resistance, and in this little area of volume here that we have in the volume profile, right, this little node here. So if we're going to find resistance, we're likely to find it in this region. We do still have resistance above us as well, which is a series of prior lows, right, and prior highs becoming support, becoming resistance. A strong resistance there, and as you can see in the larger volume profile here, a lot of thicker trading in this region. Big move down, big move up, finding sellers. So there's a whole big supply zone up here as well. Right, so if we get out of here, the first thing we'll do, if we break these previous highs, we invalidate that bearish count, and therefore we require another. It also would strengthen the bullish case as well. Now if we look on the daily time frame, we're starting to get overbought. Now this is one of those situations where you can interpret this, like I said earlier, to fit your own narrative. Now momentum on the MACD is higher than it was during the swing, the lower high swing of this free wave move down. We've come back to stronger momentum. That is not really indicative of a bearish downward trend. We would expect to see on the day time frame momentum to the downside. If this is 1 and this is 2, we would have expected to see momentum actually increase to the downside and to see the bearish pressure increase. So it's definitely not impulsive. I claimed that from day one, that even if you were looking at this as the high, saying 1-2 doesn't work, and I've explained my reasons why, but that's fine if people disagree. I've always looked at this as a combination series of zigzags lower, and it still could be, but we've also come back to overbought conditions. Now we've gone to higher overbought conditions than we did in the swing high here as well. This is also a pretty strong sign that there's some serious strength behind this move up. Alright, that we haven't remained in neutral or bearish RSI readings for a longer downward term correction. Now let's come and have a look at it in the weekly time frame. Now on the weekly time frame, we are still in neutral territory, and the RSI is below that prior that prior peak. The MACD is much more bearish, okay, and well below that prior peak, which was also negative territory. So on this longer time frame, you could say yes, we're still trending to the downside. We are technically higher, a high, a low, a lower high, a lower low, lower high, lower low. We are potentially about to reverse that and have a high, a low, a higher high, higher low. So we may have trend reversal conditions down here. We've had a bullish crossover of the average through the signal. We've come from overbought to oversold on the weekly time frame, cross the average here back into neutral territory. So we're at a bit of an inflection point. This is weekly time frame we're talking about, so it takes weeks to get through this and for things to become clearer. But I would argue that you've got to at least give it the benefit of the doubt that we've got green shoots here off of a potential bottom. We've come into potential price support. We've sold off is no small amount. Now I know for those who are expecting doomsday, a 25% decline or 24.5% decline in the markets is not necessarily what they would consider doomsday, but by any average month, year, over the last 14 years, a quarter falling out of the market is a significant sell-off. Okay, so if you are of business as usual mindset, this is a move up, this is a pullback, this is a pretty hefty sell-off. If you're in the bears will one day be right camp, then this is probably not going to be enough to whet your appetite, let alone satisfy you. So you can see what I'm saying here. I keep touching on the narratives because we've got to try and look at things for what they could potentially be, rather than saying I'm going to make it fit what I want it to be. Sorry, I don't intend for this to be a lecture, but it's just a sensitive subject for some reason. It seems to be, and some people just don't want to hear it, but I'm saying that I feel that to deny that this was possibly a bottom is folly. It could be, it could well be the bottom, and we could be impulsing higher, and we have to be willing to accept that fact. Alright, the fact that it's possible. Caveat, caveat, qualify, it's just the name of the game, unfortunately. Right then, so now that we've said that, let's now have a look at the bullish count. Okay, so the bullish count concludes quite nicely, quite easily. Let's just wrap up these fixed range volume files into their own folder. And hide them out of the way for the moment. So, from the high, we get a zigzag, not 5 waves. We can come in here, and I have done in the past, and look at it, this is 3 waves, not 5. Alright, and trying to blag this is 1 and 2, and then this is 3 and 4 is nonsense. Okay, so that's 3 waves. From there we get A, B, C into our X, and from there, excuse me, we then come down here in 5 into an A, like so, 3 into a B, and then 5 into the C for the Y, completing W, X, Y. A nice 3-wave structure, double zigzag. And then we've bottomed. Okay, in oversold conditions on the weekly, and we've gone 1, 2, 1, 2, 1, 2, and we're building an extension. That's how it counts to me currently. Now, thankfully, with an extension account is highly time sensitive because of the decreasing scale of the wave degrees and so forth. The structure of it can break down very abruptly, and it can become obviously wrong very quickly. So that's at least a positive in terms of defining whether or not it is. Now, let's just put this in here for a moment. So, let's have a look at the more recent count. We have to come down to a smaller time frame to do this, so let's come down to the 4 hour. And off of the low, this is how I have it subdividing. 1, 2, 3, 4, 5, minuet 1. A, B, C, regular flat, minuet 2. 1, 2, 3, 4, 5, microwaves, subminuet 1, zigzag, subminuet 2, wave 2, a subminuet wave 2 invalidation point of 389 spot 82. Actually, it's 87, isn't it? So let's just correct that while we're here. And let's zoom in a little lower to the 1 hour. Alright, now we can get the 3 at subminuet degree here. And say 1, 2, 3, 4. But the wave 3 doesn't even make it to 100% of the wave 1. So in a true extension of a wave 3 extension, within a larger wave 1 off of the low, because that's what I think we're dealing with, this is only certain minuet degree into minute degree in our most bullish instance, then I think subdividing this again should be port of call. So 1, 2, 3, 4, 5, and this now becomes micro degree. Okay, and inside of here we'll have 1, 2, 3, 4, 5 at submicro degree. And here we're building an extension off of the low. 1, 2, 1, 2, 1, 2. Okay, and this likely 1, 2 again. Off we go higher and higher and higher. So what I mean by this breaking down is typically the subwave will be smaller than the parent. So here's the minuet degree, here's the subminuet degree, here's the micro, here's the submicro. You see what I'm saying? Each 1, 2 gets smaller. So if we see some kind of structure which does something like this, you know, and goes down sideways and corrects significantly back into previous price territory, then the sequence of smaller 1s and 2s is definitely broken at that point. Okay, and will look all wrong. And at that point we have to try and figure out what we've got here, and I'd have to argue that at that point, if we do finish somewhere in resistance where we are currently around the supply zone, okay, we come into here and then we do something like this, right? That's a little problematic for a bullish count, because we don't have a clear 5 waves off the low, but we do have a 3 wave move off of the low. So then we'd be looking for a 5 wave impulse down and a more bearish count. Now you could argue that if we did go 1, 2, 3, 4, 5, and we had a shorter 3 than the 1 but a shorter 5 than the 3, you could squeeze all of subminuet degree into here. But it's not very pretty, it's not very convincing, it definitely doesn't look like a typical extension at that point, and then you still only got wave 3, okay, at minuet degree, which means you need to have a 4 and a 5 to come. At that point, any reversal here, you'll be looking at the top of the 1 as an invalidation point from the upside. So if you're coming back to here, this would be the invalidation point of the count. So what we'll do while we're here is we'll put another red line on here, and we'll say in the text min, I'll be able to spell in a minute, minuet wave for invalidation point. White. And we'll pop this over on the left hand side, and we'll increase the size of the text to 20. We'll put it in italics as well so it's nice and clear. Okay, so we know that's minuet. I may have spelled that wrong, it doesn't really matter. So if we do reverse here, because it's possible amongst this supply and amongst this resistance, right? If we reverse here, then any move back below this level breaks down the idea of it being 1, 2, 3, 4, 5. Okay, the extension of 1, 2, 1, 2, 1, 2 would have already broken down if we do that, because it just won't look right. So there's the bullish count. So I'm not throwing my weight behind it and saying we've definitely bottomed. I'm simply saying this is how I would express it off of the low currently, and if this is correct, further explosive move higher should come. If we reverse, we'll be wanting to watch the level here. Let's pop a price on it just to make sure we know what we're talking about. 16, almost nailed it. A move below 393 spot 16, and you've invalidated the idea of it being a wave 4. We would have to come back in at that point and have a bit of a rethink about what we're looking at. Okay, so that's the bullish count off of the low, currently dividing as a very bullish extension, but we are getting overbought on the daily time frame, so we could turn around and we're at resistance. Now if we pop through here today and into Friday and we just continue racing up, then the bullish case is definitely the stronger one at that point, because of the lack of free wave structure off of the low. It's just going to look more and more impulsive if that happens. So there's your bullish count off of the low, and like I said, just calling it the bullish count for the moment. If we do break this high and we invalidate the current bearish count of the very deep wave 2, I will label the bullish count as primary, as it has fundamentally broken the current bearish count, so I will have to upgrade it just as a matter of principle. Right, so we've looked at the bearish idea, which is very close to being invalidated. We've looked at the bullish count, which we're just going to throw these extra impulse waves into here. Let's turn that off. We've got an invalidation point here, another one. So what we'll do is we will just say wave for invalidation minuet. Okay, there we go. I'm sorry if you can hear my Discord going off. I should have turned that off before starting recording. I know it has you guys looking at your own Discord notifications. It's just I'm sat here communicating with the Discord while often working, so when I come in to do a video I sometimes forget and leave the thing on, so apologies for that if it's getting on your nerves a bit. Alright, so let's remove the count for a minute. We know we're calling this the high, so let's just look at an alternative idea, because we're going to need one shortly if this high breaks. Just as a quick reminder, the bearish count suggesting 1 down, 3 waves back in the 2, back into resistance. If we roll over before we break this level, this is still valid and we can run with it, but we're getting awfully close, so we should prepare for it to break down and have an alternative ready. Keeping with the theme of zigzags, I think by far the most obvious interpretation would be to simply add in an additional zigzag. So we've got one here, okay, then we get an X wave, then we get our second zigzag to here, then we get an X wave, which has, strangely enough, if this turns out to be a zigzag in itself, which is the better count for it at the moment, because extension less likely, zigzag more common, but an extended C. So you could point either way. The extended count, if it breaks higher, is going to look more like a wave 3 extension than a zigzag because it's getting so long in the tooth. At the moment, it could just be an extended wave, extended C wave in an ABC. So the last move would be Z. At this point, we've got a flat structure in this X, we've got a zigzag structure in this X. Not necessary, but a nice little example of some alternation going on here. Okay, zigzag, zigzag, and one more zigzag. Now, there may be an alternative, right, but things are going to get slightly out of proportion if they expand much further. Right, because I have seen a suggestion of A, B, C, and saying W, X, and Y. That would be fine, and I like the overall idea of it if we could get this to express as 5, but it doesn't. Okay, and this doesn't either. So 5, 3, 5 into X into Y. This looks more like a series of zigzags to me. Now, that's just a personal preference. I struggle to count it any other way. Alright then, so that's what we're going to run with. So we can just flesh it out a little bit while we're here. We know from the primary top that we'd be dealing with a series of intermediate waves. Okay, into and away into the same primary wave 2. We're still expecting the same long-term primary count. Okay, primary 1 up here, primary 2. This is all in cycle 5. So a big S wave 3 to come, which is going to blow people's socks off, and probably be, although I was about to say the most hated rally ever, the one from the COVID lows. This may sound counterproductive, or counterintuitive I should say. New members of the market who came in off the back of stimulus money and the rest of it, right, they think it was the most loved rally ever. Believe me, amongst experts and long in the tooth traders, guys who are based very much in their fundamentals, it was one of the most hated rallies they've ever seen, because they just couldn't believe it was happening, but it happened. A melt up scenario is always a possibility, okay, and like I said, we've already discussed the fundamentals previously. A lot of people are going to be screaming at me, I know, saying, we've still got inflation, you know, the Fed still hasn't eased, it hasn't even paused yet, how can you possibly have a bullish count? Because the market likes to get way ahead of everybody's expectations, that's why. Right, and I'm just thinking about it, I'm not ramming it down your throat or anything. You don't have to agree. But I think I'm going to very much consider very seriously the possibility of the market having bottomed. That's all I'm saying. And be damned if you disagree. You know what I'm saying. Could be right, could be wrong. That's what we're interested in, looking at the levels and seeing what the price action does. But there you go. Flat, zigzag, and 2 separate X waves. This will result in one more wave down, which will be another zigzag. No telling how deep, but if everything's subdividing as it currently is, we had a long Y wave here, pushing price well below the W. All this Z has to do is push price below the Y, so it doesn't have to be that drastic. It could literally be a sweep of the lows to slightly new lows and then you're done, or it could be something much more severe. We'll know the reasons why when we know. I can flesh the rest of this out between now and next time we come back to look at the markets, and hopefully by then we'll have an idea of what's happened at this high, won't we? So let's say new alternate. No, that says any alternate, Thomas. Let's try that again. There we go. Lock it in place, hide it. So that's the SPY. Bullish, we bottomed, climbing into an extension with the potential for 5 waves if we keep that wave 1 intact. Bearish, we've got to turn around pretty much today or tomorrow, otherwise this is going to get invalidated. And alternate, if we can break this high, we can break this high and still have a valid count, right? Because we don't know, like I said earlier, this C could subdivide, this X could subdivide further. It's possible. This could be 1, 2, 3, 4, 5, A, B, C into another X. As long as we get a deeper Z in that scenario, it's fulfilling the function of driving price lower. Okay, so we can be a little bit more flexible, but that's the most obvious one I can see currently. Alright then, let's come over now and have a look at the Nasdaq. Right, so I do have a count on here as well, but we're just going to look at the chart for a moment, because once again on the weekly time frame we went from overbought at the highs to oversold. Overbought to oversold, sold back in March. Overbought to January 18 to bottom of December 18, oversold. Overbought to oversold, overbought to oversold, overbought to oversold. And if we look at our, let's go back to the SPY for a moment and do the same. We've got the counts switched off at the moment, right? And then we line this up with our PCC and VIX extremes, of which I've just added the recent lows of PCC extremes. I think it qualifies, and therefore a likely low. We have had strong bullish divergence since this low here to this low here, right, on the RSI. We've had extremes on the oh dear, what did I just do? Did I just delete that? There we go. We've had extremes on the PCC, and we know that on the weekly time frame, let's bring it out to the weekly, we went overbought, oversold, overbought, oversold, overbought, oversold. February 18 to December 18, overbought, oversold. PCC extreme, VIX extreme. March 20, overbought, oversold within 36 days, right? PCC, VIX extreme, bottom. Overbought, oversold. Overbought, oversold, PCC extreme, bottom. If this pattern, which we've seen multiple times throughout the last 14-year bull market, if this is still intact, then that was the low. Or okay, saying that was the low is unfair. If this pattern remains intact, that was likely the low. Let's come back to the Nasdaq. Now, the Nasdaq has displayed even greater strength off of the recent low. If we just come out to the monthly for a minute, we don't need that channel. Let's get rid of that. Alright, so massive engulfing candle on the monthly. This body of this candle gobbles up the entire month's bearish price action, which was no bloody joke. Okay, intraday wise, it was a 14.79% decline in itself, reversed in a single month. That's strong. There's just no denying it. And when we see candles like this, they often symbolize a low being reached and a reversal being underway. Okay, so we often see that kind of strength off the low. We don't always see that strength off the low, so we don't have to have it, in other words, in order for it to be the low. It just looks very convincing here, as does the weekly time frame, crossing back over into positive histogram readings here on the MACD, back into neutral territory on the RSI. Now in the daily, we're already overbought. What I find interesting here with the Nasdaq, let me just show you why I had that channel in place. Right, so if this was to move down off of a low, we would normally be channeling A, B, C, WXY 1, 2, 3, 4, 5, right? So taking the 1 from a proposed 3 or A from a B and projecting forward to find the C, the Y or the 3 or the 5, right? We've broken this downward channel. Okay, we're heading higher. Our MACD readings on the day time frame are once again higher than the prior swing pivot and slightly higher than the highs. The RSI is flat out higher than the prior pivot, but shyer than the previous high. So momentum here is stronger than we had while we were back here in this move. Right. So if this was a downward bearish trend of oblivion, we would be expecting it to actually pick up momentum to the downside. Now, I've already expressed why that might not be the case, because it's a series of zigzags rather than an impulse. An impulse would probably do that and become more and more aggressive. You can't look at this anymore, for anyone out there who's trying, as 1, 2, 3, 4. We've already invalidated that idea with the 4 coming back into price 1 territory, so it's got to be some kind of series of corrective structures if it's going to go lower. Alright then, so blah blah blah, yes, Tom, we get what you're saying. You're getting bullish, but there are problems ahead. 250-day exponential moving average is right ahead of us, just like we can see here in the SPY. We're just testing it. That's the weekly, it's come to the daily. We're just coming up to it now as I speak. Right, so this is going to be potential serious resistance in a supply zone right around trouble as I'm speaking to you now. So if you can't get sellers here, they're not there. That's how I would say. If the sellers aren't here, then they're not here at all, right? Because if you're not going to start stamping on this thing now, then you're not going to do it. Okay, not until we get to another level where it's possible. I mean, this is the perfect opportunity currently to stamp on this thing. Alright, so we've broken this downward trend. Let's look at the count. So, primary 1, 2. I've labelled it primary for the moment. Let's come down to the 8. And I've got the same extension off of the low. 1, 2, 1, 2, 1, 2. Now the only reason I've had to upgrade this already to primary is because the exact same count we had here as we had in the SPY for the bearish count has already been invalidated. This is the high, right? That was to go 1 and 2. But look, it's already gone. So I've had no choice but to upgrade this to being the primary count, as it's the only valid one currently. Okay, so a bullish count, with broken trend. We're on our way up by the looks of it. Now it depends how you define trend. If we're looking at a parallel channel and we're going A, B to find C, 1, 2, 3, 4 to find 5, right, then we've broken the parallel channel. If we're just taking the highs, okay, then we haven't broken trend yet. High, lower high, lower high. Get above this trend and then set a higher high above that swing, and you're looking even more positive. Now if it's an extension, it will likely do that, which I think would be quite a surprise to a lot of people. So yeah, that's the only valid count I've got at the moment, which is the bullish one, because the bearish one's been invalidated. So we'll come up with an alternate now. We'll use the same alternate because I think it's perfectly valid. Bring the 2 down to here, and we'll say it's simply a bigger correction. Okay, it's just a bigger correction. W, X, Y, X, and Z. And I'll fill this out later. Okay, as to not waste any more time. So that's how I'm looking at things for the Nasdaq, and that's how I'm looking at things for the SPY at the moment. Just keep your eye on this local area, right? If we're going to get a reversal, we are in the absolutely perfect place to reverse to the downside. Okay, lots of resistance, got supply, we're at the 250. If the sellers can't come in strong here, then they're not here. They're somewhere else, they're going to be higher up. Alright, so a feather in the bull's cap if we go higher from here is how I would express it. Okay, so now let's have a look at the PCC. I put in the PCC low on the SPY because it's done enough to satisfy me that it was a low. It's come back to this same trend line and is in fact gone a little further. Right? It's peaked and it's reversed. These peaks do not last long. Okay, they just don't tend to last long. So if we have done it, you can see that the next move after peaking is a pretty significant move back down. Now these are all patterns, right? It's what we do as human beings. We look for patterns. This could all be bollocks and it could do that. Alright, I'm just saying, if patterns hold, a further move down would be perfectly normal under these circumstances. So, potential low in place there. VIX, declining. It was in a compression pattern. Right, now I'm not saying it occurs as part of an Elliott wave structure like a contracting triangle here. I'm simply saying it is an Elliott wave structure in isolation. They just tend to show up, but you can't count impulses or motives or correctives collectively together as part of the sequence. It just doesn't work in the VIX, but they do occur independently, and this looked very much like a triangle, but it's broken to the downside, and we're rolling over with the 60 and the 250 moving average again here. Now once we have a little peak, we tend to just trundle back below the 250. Little peak, trundle back below the 250, little peak, trundle back below the 250, little peak. So maybe we're just going to do the same again. There is an underlying trend of rising volatility ever since 2017. We discussed this before. So each time we do this, we come a little higher in our average overall volatility, in our lows, right? The market's just becoming more volatile. Now if we're moving into a wave 5, and we're just about to enter the 3 of the 5, that means there's only 3 waves left of this move, and only one more corrective move left, 2 motive elements left, right? And this could push us out 23, 24, 25, and then you're going to finally have that insane explosive collapse, right? Now this reverses and goes higher, much higher. PCC turns around, market implodes, we'll all be bearish again, right? Myself included. So that's just the way it is. So that's the PCC, that's the VIX, that's the SPY. I don't think there's anything else to discuss. Keep an eye on these levels at the moment. You know, 417 spot 44 is potential resistance. We're in supply as we speak, and see how this potential extension plays out. If we erupt, eventually we are going to get a completion of a larger 5 waves, because that wave 3 extension is going to complete, right? So we're going to get 1, 2. That extended 3 is going to complete. 4, 3, 4, and 5. Then you're going to be coming all the way back to here, because that's what markets do. They go up, they go down, they go up, they go down. Now, it doesn't have to be that drastic, but it could be, right? And that's going to be an exceptional buying opportunity if we get 5 up and 3 back. Big time style, you're going to want to be all over that. So there you go, guys. I'm going to leave it there. Thank you very much for joining me on this technical analysis of the SPY, the Nasdaq, PCC and the VIX. It's been a bit of a long one. I will make sure I timestamp this for you guys. If you're new to the channel and you like what you're seeing, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below, and as always, a huge thank you to my Patreon subscribers. Your support is greatly appreciated. And if you're interested in becoming a patron, there's a link in the description box below. Head over, have a read of the various tiers, see if you're interested in signing up, and sign up. It's a good time to do it. It's the start of the month. And if you're not following me on Twitter yet, there's a link to my Twitter feed as well. And yeah, that's it. Take care of yourselves, guys, and I'll be back with you as soon as possible. Bye bye.